and welcome to the latest episode of the PKF Podcast. My name is Courtney Charleson. I'm your host today, and today we are joined by Jim Allenby, Managing Director of PKF Parvate Sustainability. Thanks, Jim, for joining us.
Great to be here.
So today we're going to be talking a bit about sustainability and sustainability reporting in more sense. How are you seeing sustainability reporting at the moment within the industries, and how's that being rolled out?
I think it'd be fair to say it's come very quickly for some. For those of us that have been in the industry for a few years now, it feels like it's been very slow. It is a new reporting regime that I guess seemed like it was a long way away when it was first flagged. The government was going to legislate it, and it felt like that's in the future. It's not coming. Yeah. But I guess the future has come. Group 1 reporters are currently either having submitted if they're end of year reporters, or will be submitting in the next sort of 2 or 3 months in June, July of 2026. So what we're seeing is Group 1s are, if they haven't got prepared, are scrambling a little bit, if I'm honest with you, and we are working with a few, and they're doing a great job, but there is a lot of work to do. So we're seeing, I guess, the end of the reports being constructed and the various, I guess, audit processes of review before submission to ASIC. And then, you go down to the Group 2 and the Group 3 reporters, and they're really in preparation mode. Group 2s are getting close to having to start collecting information to report, and Group 3s are really in that preparation phase where they're looking at what it means to the business and the resourcing required. Yeah,
great. Can you outline for me, like specifically, for those who may not know, what revenue targets are these people, Group 2s and Group 3s in particular? Where are they sitting at?
So Group 1 reporters are the larger entities, and the way the groups are defined are based on employees, assets, and then turnover, and it is phased in three different. These three different groups are based on these statistics or these numbers, and if a company meets 2 of the 3 thresholds, then they are reporting in that group. You'll see on the screen a graphic here that outlines the groups in some good detail, but basically for Group 1s it's over 500 employees, $1 billion or more consolidated assets, or $500 million or more gross revenue. And then it comes down with Group 2s, it essentially halves each time, and then with Group 2s we're at 250 employees, $500 million or more consolidated assets, or $200 million or more gross revenue. And that's where we're seeing, at the moment, as I say, the Group 2 starting to report. I guess just on the Group 2s, we have seen some Group 2s, I guess, not know they're Group 2s till they go through this process, thinking they're slightly smaller businesses than they are. And I think sometimes that employee threshold sometimes takes them over from a Group 3 to a Group 2. So that's just something to take into account for those businesses that do have a lot of employees, which obviously we love, because the more people we employ, obviously it's a great business. So that's just, something for the Group 2s to consider as well. And then we get down to the Group 3s, which are, the smaller businesses that are reporting. And it is, being considered a relatively harsh threshold for them. So, they are auditing, especially the smaller Group 3s, are finding this relatively difficult. So they have either 100 or more employees, $25 million or more consolidated assets, or $50 million or more consolidated revenue. And those are businesses that we're seeing, more than we thought at the start. And certainly the Australian government thought there may be about 1,500 to 2,000 of these entities. What we found out subsequently is there's over 6,000 of them. So it's a bit of a surprise to many people when we talk to them about this reporting that they actually do achieve these thresholds and they do need to report.
So you mentioned before that Group 1 reporters lodging this year. Will that help businesses with being able to see these live reports that you've been discussing?
Yeah, we've had a lot of feedback that a lot of companies want to see a report live before they'll, commit to the process. And that's fully understandable because people like to know what they're doing before they do it. Yeah. And I think that the feedback has been from ASIC is year-end reporters, so those that have had to lodge at the end of December and are now, going through the audit process and will be live, in the next few weeks in March 2026. ASIC are going to give a great sort of process where they're going to review and give some updates and some feedback as to what they've seen in these reports. So not only will they be publicly available because they're lodged as per all financial reports, but ASIC themselves are going to spend a lot of time and effort making sure they give the market some clarity and some certainty on what they're seeing, where the gaps are. And probably if these group ones have got the reports right, if they're on the right track, and that's where us as practitioners, but certainly businesses, are going to get a lot of value in March and April, where we get this review from ASIC. We see some live reports in the market and get some certainty around this, this reporting and what it actually is.
Yeah, sure. And I guess what's the importance of having someone like yourself or PKF Parvate Sustainability in making sure these reports are correct with ASIC when they're lodged?
I think it's just the certainty around the topic. I think it's a new legislation and it is a new industry. So it's almost to have those guardrails around to say, we are a good company, we are a sustainable business, we are doing things the right way. It's more as, I guess, to check and make sure, like an auditor will check, to check and make sure, we are submitting the report in the correct way. It is audited, it is signed off by directors. Generally, some certainty is wanted by both auditors and directors, as we all know. So it's really that support person and that, I guess, advisor to make sure, we're on the right track and everything is compliant and, we're able to submit our financials.
So if we're now focusing on that Group 3 bandwidth, and you were mentioning before there's going to be quite a hefty amount of businesses in that band, how do you suggest that they implement this type of reporting, I guess, without adding strain into the business?
Yeah, it's a question we get asked very regularly, and with a big Group 3 presence in the PKF network, majority of our client base are Group 3 reporters, so it's a question we get asked regularly, and I think the simplest answer is start small, start early. We're seeing with Group 3 businesses, some want to wait and put their head in the sand, and you have to respect that because it's their business and they should run it how they see fit. But for those that want to start early, what we're seeing is the ability to, I guess, stretch the work out over a longer period of time and to take burden off the internal resources and the internal staff. No doubt most Group 3 companies, just by their size, are usually stretched pretty thin. Everyone's working at full capacity. Generally, they're growing businesses, often private. So we see the staff able to do this work, functionally and from an ability and technical point of view, but perhaps not having the time to do it, especially in the early stages. So the main, I guess, advice I give is start early, start small. It doesn't need to cost, a huge sum of money at the start. It doesn't need to take up thousands of hours. But over the course of a year or 2 years, there is going to be a significant amount of work. So the cost and resource pressure will certainly be less the earlier that the business starts, because it can be spread out. And I think there's going to be there'll be less, leaning on consultants. If the client starts earlier, they may employ internally, they may look to add it to another function. And we've got some wonderful clients at the moment that are looking to build up the internal capability of their team so that they can achieve this reporting not just in year one, but in future years as well. Because I think a lot of people forget it isn't just one report 1 year. This is a yearly expected report that'll be lodged. So the more we can build up that internal capability, the better chance the client have got, good outcome over a longer period. Not just let's just get the first report done and then everyone breathe a sigh of relief, which no doubt will happen. But we're really keen to set our clients up for longer term success. And the advice is very clear. Start early, see what you've got internally. You might find the team is not only able but also very keen to be involved in this, because it is a popular topic. And we certainly want to support that for our Group 3 clients as much as we possibly can.
Yeah, absolutely. And I guess you mentioned starting early. What does that mean in terms of how early clients should be engaging their auditors in this process, mainly if those Group 2, Group 3 that are coming up?
Yeah, I mean, we've done a huge amount of research on this, and in our experience, in our opinion, if you allow 24 months before the first report is due to be lodged, then that gives a good amount of runway, good amount of time to engage with your auditor. Certainly ask the questions. What are you expecting to see? What advice can you give us? The usual questions you'd ask an auditor about the financial statements. Most auditors, especially in the PKF network, are really well across this topic now. Everyone's learning at the same time, but I'm very pleased and proud at how engaged the PKF audit team have been. But certainly it gives that time to prepare data collection systems, processes, internal frameworks, so that when that reporting year hits, it's almost as automated as possible. So the advice is certainly 24 months out, from that first report being due to be lodged is the advice, which is 12 months out from the start of your reporting year. Gives a really good opportunity to have as much great data and great information as possible in place, so that we're not scrambling at the last minute, because that's when mistakes happen, and that's certainly where it becomes more expensive as well. Yeah,
absolutely. And speaking of, things being expensive, there's going to be costs that do come with this. What can businesses expect in terms of costs for this type of reporting?
Yeah, like everything, it depends. I think the scale of the costs is almost endless. The huge companies, the BHP, the large mining companies, the supermarkets, they're spending tens of millions of dollars on this. To create systems, create reports, it's a huge undertaking for them. Smaller companies is obviously not going to be anywhere near that, but there is stats out there in the market, and your local PKF partner will have these stats to be able to share with you. But I guess to answer that question without giving a definite figure, the earlier that someone starts and the more internal resources, the less it's going to cost.
Yeah.
What we're seeing with our client base is some like us to do all of it for us and fully outsource it, and that's fine. Some like to do as much internally as they can, and that's fine. And the gap between what that costs from one to the other is significant, but it very much depends on the internal capability of the business and also the time they allow themselves to achieve this. No doubt the earlier they start, it's significantly cheaper. The more internal resource they can use, it's significantly cheaper as well.
So Jim, I can imagine as being, PKF Parvate Sustainability, you're not only going to be or are working with just clients of PKF. You can head into other businesses that might have their own auditor already set up, internally, externally. So how does that work? Can you explain that?
Yeah, it's a really important question, and it's something the market probably didn't define that well at the start. So for us as PKF Parvate Sustainability, we are treated for the same independence rules as anyone else. So if it's an audit client, there's certain work we can do and there's certain work we can't do. Equally, for another client with another firm, the same rule applies. So we're seeing ourselves working across, obviously, the PKF network significantly and really enjoying that. We'll also need to bring in expertise when we're conflicted out of work for an audit client. So I guess the short answer is there is a lot of collaboration in this market at the moment, and we are working with a number of companies that have different auditors. And so we communicate with that auditor regularly. Here's what we're up to. The position of the client is X. What are you expecting to see? So this industry requires a lot of collaboration, not only across, I guess, internally for us at PKF, but especially when we have an audit client, we need to make sure, one, we are very respectful of that independence line, and also just communicate really well with either external providers, whether they're consultants or other accounting firms, and vice versa. When we're working for other accounting firms' clients, we make sure we communicate with the auditors very effectively and very regularly. There is still some confusion in the market. Who can audit this? Is it your financial auditor? Is it the same auditor? Is it someone different? The advice there is generally it's best to use your financial auditor, but you don't have to. So that's where we need to be really sharp and aware that we work, yes, with PKF clients and love doing that, but we're also working with other firms' clients and need to communicate really well.
Yeah, absolutely. And I guess the other firms that perhaps may not have the sustainability specialisation within that too, and being, I guess, a consultant into that as well. So
yeah, there's a number of small accounting firms, smaller accounting firms across Australia. So we work with other firms in West Australia, here in New South Wales, a couple of different firms in Melbourne and in Brisbane, where they have clients that need this support, but they don't have the service line themselves. And we've got some great relationships, as PKF do, across a number of service lines with these firms. Sustainability is quite new and it is niche, so we are finding the need to work across not just clients, but different firms as well, and that's a really enjoyable part of the job.
Yeah, no, it's great to hear. So I can imagine that, this being the initial stages and the early stages, there's the path is laid for what the future might hold, but changes, are always likely within this space. Do you see things being, fixed as they are, or you see anticipate some changes in the future for this reporting?
Yeah, once again, one of the most common questions at the moment is this going to change again? I think people are a bit, burdened by previous changes in this legislation. Mm-hmm. We're all aware of what's happening in the Northern Hemisphere in the US and Europe. This industry has changed a lot over the last 5 to 10 years since I've been, involved in it. I think here in Australia, we did take our time to legislate this. We did take our time and took a lot of consultation from within the market and externally. And this reporting regime is fixed. It is acknowledged as being, live. Group 1 reporters have lodged, ASIC are regulating it. Yep. So the likelihood of it changing is extremely low, to be honest. Mm-hmm. I think Group 3's, the best, hope that they've got is that it'll be a slightly watered down version for them. Mm-hmm. And I think their Scope 3 emissions, which will, we have information on, so their Scope 3 emissions, they may get some slight, not a free hit, but they will get a watered down version of what they need to produce, I'd say, in the future. But right now the regime's very well defined. There's no expectation it's going to change. I think a lot of people would have significant issues if it did, having gone through the process it has. So the feedback is certainly that there's no expectation it'll change, whether it's from a regulatory point of view, a government change point of view. It seems very well fixed, and we're certainly preparing for it to be as it is, and we certainly advise that clients of all sizes, it's here to stay. It isn't just 1 year, it is going to be ongoing, so prepare accordingly.
This sustainability reporting, I can imagine there would be implications in not implementing this or not hitting the marks with that. What does that look like for reporters in these groups? Yeah,
it's as I say, it is a financial reporting that is regulated by ASIC, mm-hmm. as per other reporting. The penalties are relatively similar. There is, with this, there is director liabilities to consider. Directors do sign off on this reporting. Mm-hmm. So that's really where we're seeing, the biggest push from the regulators to say, directors, you are signing off on this. It's like any other director statement. It's a legal obligation. Mm-hmm. Auditors are signing it off as well. So there is a significant amount of, rigour around the expectations. ASIC will have penalties, whether it's financial or otherwise. They're pretty well defined as per other financial reporting issues, And simply, you just won't be able to lodge your financials if you don't have this reporting as part of that, reporting pack. So as much as we love talking about the positives of this reporting, there are some potential issues for getting it wrong. What I will say with ASIC is they are going to take a pragmatic and proportionate approach to this. Mm-hmm. They've been wonderful in the information they've given us as practitioners to say, we are going to be pragmatic, we are going to take into account the size of business, the amount of resources it takes to achieve this reporting, but the business still does need to make a decent effort and best endeavours. So yes, there's penalties, directors are on the hook, but as long as they put in a good effort and they can show their workings, we're pretty comfortable that ASIC, will take an approach that is sensible to the size of business.
Yeah. So Jim, who's the best person at PKF Parvate to contact about this reporting and questions that clients or potential other business owners might have?
Yeah, my role is a national role, so I do get the pleasure of being in every PKF office from time to time, but always able to be contacted either email or over the phone. Contact your local advisor. If you're already a PKF client, please reach out to your existing partner or advisor. They know where to send the information or to reach out to me and my team. Or if you're external to the PKF network already, please just reach out directly to me. There's plenty of information that I can share, plenty of information on our website. So yeah, please reach out and ask any questions.
Yeah, great. Perfect. Well, Jim, really appreciate you joining us on this podcast today, and a very popular topic at the moment. So I'm sure there's going to be a lot of people who are very interested and will, want to get in touch. So, and thank you everyone for joining us on today's podcast.